Good turnaround Tuesday, everybody. Hi, Alexander, Stephen. Giles Coughlin is with us today. He's going to be addressing gold in front of World War III. Amazing that one visit by Nancy Pelosi is generating all this military action in the Strait of Taiwan, on the Straits of Taiwan. How you doing, team? How's everyone doing today? Morning.
Morning, Dale.
Hey, guys. So a little risk aversion going into it. You think that's a headline? Dollar stiffening up a bit today, and gold new recovery highs. Silver testing resistance.
Look at what the yen's doing.
Yeah. What a move. I mean, that's why I had it up here in 2 weeks.
Yeah.
Amazing move. Let's see if yields are following it again today. Yeah, 10 years down a little bit. So far this breakdown is holding. So what are you going to do in the dollar, guys? Any ideas here? Personally, I don't want to buy this. I think there's a shot that we even test the Fed low.
Wow. Well, I think what was really important is if you look at the dollar index, Dale, the dollar index actually hit the 50% retracement.
Oh, look at that. The 50-day too. A lot of 50s.
A lot of 50s. Yeah, I didn't even see the 50-day.
I didn't either till I put it up here.
Until you pulled it up. Yeah, I guess it is at the 50-day moving average as well. That was actually my chart of the day yesterday, was the dollar index and I wasn't looking at the 50-day. I was just actually looking at this channel support and the 50% retracement of the May, I think it was May lows to most recent highs. So that low that's over there in about the middle of your screen, a little farther left, that low. Anyway.
Maybe you could tell Christos to tag me on those charts this day. I haven't been seeing them in my stream.
You know what? I can tag you. It's one of those things that I started doing the chart of the day because it hasn't been done in a while.
Oh, okay.
and that Steve thought he was going to start doing the chart of the day, then he stopped doing the chart of the day. It's one of those like
should have turned into the chart of the month.
It's the chart of the month, and it's like, man, I really need to get going on those again. So anyway, so it has not been a consistent thing, and that's been my fault
because they're great.
Well, people like them. It's what a lot of it had to do really with scheduling conflicts of things that kids have to go places right after I was finished with everything. But anyway,
well, the Aussie is nervous about Taiwan.
Well, I think it's important to be important to be cognizant of what's happening in Taiwan. And just remember that this is going to be a kind of a poking and prodding of the relationship. I don't think this is anything that is really going to turn into much. I don't think this is going to be the straw that breaks the camel's back. Right? That's the way I would be looking at it. I think by next week there's going to be no talk of China at all.
Okay.
Matter of fact, actually, I believe.
Morning,
after the jobs report on Friday, then people will not even be thinking about China anymore. So that would be my opinion. But anyway, any other views here?
That's great. Yeah. Canada, when the dollar was weaker yesterday, popped. Probably had something to do with the break, crude again for the 20th time knocking on the door of major support here. What do you guys think? Going to be able to hold it this time? Again? Grega, you have a view on crude?
Actually, it will not really make any big change even if we retest this low around 94. I just think that there is still a corrective pullback, which obviously can be a more complex one from this year highs. So I still think that when crude oil will, as long as the crude oil is here neutral or even turned to the upside, I think that dollar CAD, in my opinion, Mexican peso, even Kiwi will see more gains. I still think that these are commodity currencies that we should pay attention on. And I think that if crude oil is neutral, or even if it bounces from a little bit lower supports, I think that this could be attractive for those currencies.
Okay, so yesterday when you're talking about the Aussie and buying pullbacks right around the 69 level, today's candle does not shake that conviction.
Yeah, I mean, it's still early in the day, so things can change through the US session, but I really doubt that we will see any significant moves before the jobs data later this week. So I think that this will be the main driver going forward. But technically speaking, I'm bullish Aussie as long as we are trading above that 670 level.
Okay. And hey, Grega, and good morning. By the way, you know, there was a time, and there will continue to be times that people worry about that big. What is the dam called? I'm trying to think of it right off the top of my head. The big
China?
dam.
Three Gorges. What was it called?
The Three Gorges Dam. Yeah, that's it, right? Isn't that it, Stel? And
yeah, I think so.
You know, every time that topic comes up, which everybody's like, "Oh, that dam's gonna break." You know, the if the waters break and millions of people will die in China, blah blah blah. I mean, which is I don't want to underscore how how sad that would actually be, but the market response, in my opinion, was always the Aussie would get hit first. And then you have to buy it. You have to get long the Aussie after that Three Gorges Dam breaks. That is like plain and simple, like very easy trade in the FX market. I know it's you don't in the currency market or in any markets for that matter. You don't want to think of like how do we capitalize on such a horrible
tragedy.
Event. I'm sorry.
On a tragedy.
On a tragedy, yeah. But if I think about like. World War III or China and U.S. conflict really heating up, the first thing that's going to get hit, in my opinion, is going to be the Aussie dollar and the Kiwi. But you have to be there to buy it right after. Like after the dust settles, you have to get ready to buy like the Aussie and the Kiwi, because I think that those currencies will be, in very high demand globally as everybody's going to be seeking commodities. I try to envision, and this is one of the things that we've talked about this year. Like I always have seen the Aussie going back to parity, and I'm trying to always figure out how in the hell that actually happens to the U.S. dollar. And I think if you start thinking about like a serious conflict with China and the rest of the world, or the Western world, if you will. That I think that's one way that the Aussie would be very bullish, actually.
Well, we've been there before, right? We've been 110.
Oh yeah,
what were the conditions for 110
before? Yeah.
So what were the conditions when Aussie was above parity?
I don't remember. I'm trying to think way back when what it was, and all I know is I was shorting the Aussie up there. I can't. It's been so long ago at the time. I have a hard time remembering.
And Bobby Axelrod made his first billion shorting airlines when he saw 9/11, the first plane going into the tower. All right, he was shorting airline stocks.
Dale, you're living in fictitious land right now.
Oh, you mean he's not real, Bobby? Huh? Oh, he's my idol. Okay, I thought he was real.
I don't want to ruin that show for anybody, but I'll tell you, I lost.
Did you like it?
I lost my appetite at the end for that show. Let's just put it that way. So anyway, hey, I wanted to take over the charts really quick and show you guys a few things.
Like the Outer Limits. You're taking over the screen.
What's that?
You don't remember the show The Outer Limits, do you?
I remember The Outer Limits. I never watched The Outer Limits.
Oh, well, at the beginning, they say we're taking over your TV screen.
Oh, well,
and
that
that was pretty.
Stelios might remember the outer limits. Stel, do you remember the outer limits?
Nope.
Stel is like,
Nope.
no.
Okay.
Oh.
Stelios
JP
doesn't
does.
remember what he ate yesterday, so
That is
it's
true.
yeah.
Oh, well, Steve's here too. Good morning, Steve.
Hey, Steve.
Good morning, although it's an afternoon.
I know it's afternoon, but I know you have this wonky sleep schedule over there. So, when it's in the morning here, I still feel it's like in the morning for you too. So,
No, I'm up since very early.
oh, okay. Well, Steve, any opinions about China and the U.S. And this Pelosi visit that's happening today?
Yeah, I think all that is political theater and BS. I don't expect any real escalation or lasting developments from that.
Yeah, actually, it's interesting you say that, but you have Germany. A few minutes ago, there was a headline saying, "If there is aggression by China, we're going to take Taiwan's side." So it is theater a little bit, but there's a lot of people involved now, a lot of countries involved. So I hope you guys are right. Let me leave it at that.
You can never be 100% sure about anything, Stelio. That is indeed the
Yeah.
case. But do I believe that we're in the precipice of World War III because an 82-year-old lady is visiting currently Taiwan? She's not a president of the US, right, or anything. No,
Yeah, but
I
she
don't. I don't think.
represents the US. Come on, it's the same as if the president was there, pretty much.
Yeah, but
in my
she's
opinion.
hot.
He needs
Oh,
a win.
come
He needs to
on.
look tough.
Joking, sorry.
She has an election in
No,
3 months.
but and I agree with you, Steve. That's what I said. I think the market will forget about this in a few days. It's not. This isn't. You're gonna see. I mean, look, China's. What are they doing? They're running their planes right on the strait, right now, and
Yeah, of course they do.
Showing or military force and blah
Yeah,
blah
of course.
blah.
You would do this. You would do the same, right? Because on their
Yeah.
side, they want to say like, it doesn't matter why you do it. We also want to send the message. You know what I mean?
Yeah,
Like, don't mess with us.
This isn't gonna be the straw, as I said earlier. This is not gonna be the straw that breaks the camel's back. This is not gonna be it.
And anyhow, I have the cynical point of view of somebody that lives in Greece. There is no day, literally, there is no day that dozens and dozens of military airplanes from Turkey don't pass through our airspace, right? And who knows, we might be doing the same for them. Some things are posturing, you know what I mean?
Yeah, true. All right. Well, as we were talking about, the yen is firming, and it's been firming. You can see the 6J futures. You can see the bear flag had completed, a couple weeks back, and we're bouncing here from pretty key support in the 6J. The dollar index also finding support. Dale, this is that 50% retracement, but you're exactly right. That was the 50 DMA that also came into play. I think it was covered by my trend line yesterday. I didn't even pick up on it.
Yeah.
It was late in the day too. But
That's cool when moving averages kind of smooth out to almost be a channel.
Yeah.
Trend line,
it's really, really darn close. So yeah, I mean, but you can see how important the dollar index support is here.
Yeah.
The yen's firming. And those are signs that we could have a little bit of risk aversion. And then look at the S&P. I mean, the S&P is, still pretty strong, but I don't know. I mean, do you guys trust the stock market here at these levels? Should we be selling strength, or would you guys be shorting the markets here? Grega, we haven't heard a whole lot from you. How do you feel about the S&P here?
Well, I think that there is time for a pause now. I think that we will now see some back and forth moves, but I don't really see any aggressive move to the downside now with this US-China thing. There was some pullback on stocks, but nothing really aggressive to the downside. So this tells me that maybe investors are not so afraid of what may follow next, but I'm looking for this to be any kind of a pullback, just short term. I still think that we can ride higher. On German DAX, for example, we had quite a nice 5 waves up from the recent lows. So I see this as a leading diagonal that will take us higher. I share this with members in our chat room as well. So I think that, as I said, maybe a pause, but then more upside.
Okay. All right. Well, I was also reading, thank you, Greg. I was also reading that China suspends imports from 35 Taiwanese food exporters. Out of the 3,200 Taiwanese companies registered with China's customs. So 35 companies out of 3,200. That's not a big swipe at them, is it? I mean, I don't think it is. I think, Steve, you're exactly right. Political posturing and theater, right? So Dale, what are your thoughts here regarding precious metals? Because we've seen this nice rally in gold and silver. Do you trust this move here?
I'm looking for a pullback in those, outside of war. I think that we could get a pullback in gold maybe towards that I don't know, 1740 level or so, and silver maybe 1920, 1940. Then I'd be interested. I'd still hold partials, mainly in miners. And I even took a little of the silver off yesterday. So I'm with Stel. I'm with Stel that it was time to take. You never go broke taking partial profits.
Exactly.
That's right. Still, so you still targeting, $60 in silver right now?
Eventually it's going to get there. But the thing is, what surprises me today is that with the risk of that we're seeing, due to Pelosi, usually what happens is gold gets bid, but silver and platinum don't. They usually trail, and they're actually following today, which is surprising. So that's stronger than I expected. I did take a quarter off yesterday at 2040, which was it's been a really good run for a few days. I would agree with a slight pullback, but they're looking strong now. I mean, they're really looking strong.
Right, and it's like they're definitely following what's happening in the bond market. Speaking of yields and bonds, I mean, here's your 10-year. Here's the 10-year bond market. Here's the 30-year bond market. Nice inverted head and shoulder patterns continue to play out. Yields continue to drop. How do you feel about bonds here? And by the way, the euro is trading at lows of the session right now. Just FYI, in case you're not following. We should talk a little bit about the RBA here in a second. But we've got the bond market that is selling off. Do you chase bonds higher here, or do you guys think that yields are going to continue to come down? What do you guys think?
That's a tough one. If you want to be long bonds, I don't think you should be chasing it here. I think you should wait for a retracement in yields towards that 270. Test those, the breakdown level. Yeah, something like that. If you want to be long bonds, yeah.
So, if
that's what I would do.
You got the 10-year that's, sitting here. Well, if yields do bounce, that means that would be the equivalent of a dollar bounce as well. And you got the euro that's actually trading at its lows of the session right now. By the way, did you guys see that the euro had a probe of this 285 level? And matter of fact, overnight it was at 102.93. Little false breakout here in the euro. And you guys know the old saying that you guys hear from me all the time: false breakout leads to breakdown, or false breakdown leads to breakout.
Especially because it occurred in the middle of the Asian session, I believe. Really hard to trust the breakouts during this time.
Nice to probe those areas, trying to squeeze out every last stop that you possibly can, right? So that's something that that are paying attention to. Especially speaking of Asian markets, the RBA actually raised rates by 0.5%, but why did the Aussie dollar come crashing down? My opinion is the market was expecting a little bit higher than 50%. The RBA has been doing this odd rate increases, over the last few months, and I thought they were going to go 0.65%, but they didn't. They only raised 0.5%. But it seems like they had a little bit of a dovish slant on everything. So, do you guys have any views of the Aussie here? Because I sold my Aussie yesterday on Aussie long, as we were approaching that 70.50. Thank goodness, because it is really, turned lower. Do you guys have any views here? Grego, what do you think?
If the US notes will continue to trade higher from that head and shoulders patterns, and if US yields will continue to see obviously more weakness, I just think that this Aussie dollar will sooner or later capture very nice support here. Because if really dollar is going to be sold off, I think that this Aussie will very quickly stabilize, in my opinion.
Maybe down to that zone you have there, Blake, for a right shoulder.
Yeah,
I'm
look, I'm an Aussie bull. Everybody knows that. I wear it on my sleeve, but I also took profits yesterday. If you go over to this is in the ForexAnalytix community, guys. If you go into the trades room, you can go to yesterday. I guess where the hell. These are all, you can see my open positions here. Just where I'm, taking profits off of the here I took all of my Aussie, closed all US dollar shorts across the board yesterday at 4:58 a.m. and you can see the positions I was in, and I locked them all in, and I closed them out yesterday, and I guess the Aussie was at 70.37, so we were right here yesterday when I closed out of my position, right?
Nice timing.
Yeah.
There. Well, and I haven't reestablished them either. So I'm, and I stayed away from the RBA last night. I actually went to bed, during the RBA because I was a little tired. Anyway, and I don't want to buy it yet. I'm not in the mood to buy the Aussie yet. But Dale, as you pointed out, we get us back towards 68 cents, and I might be more attracted there to be a buyer of the Aussie. So, Gregor, what do you think about down at 68 cents? Would you be a buyer there? Or
yeah,
on a breakout?
Like Dale said, this could be a very nice right shoulder of the head and shoulders pattern as well. So the left shoulder would be in the mid-June.
Yeah,
the left one.
Somewhere down there.
Yeah, so I think
with
that this is still, as I said, corrective setback as part of a higher degree reversal.
One of the other things, and if you guys follow like emerging market currencies, speaking of one of the positions I took off yesterday is I took off my dollar Mexican peso short. I mean, you can see this thing is screaming higher. It's actually at highs of the session right now, and that's a little bit of that's a little bit of a sign of risk aversion as well. You've got the dollar Mexican peso that's moving higher. You got the dollar South African rand that just broke a descending trend line. That's really capped the pair for the last month, and so this weakness in emerging market currencies also suggests that we're going to have some risk off, and so I don't know. After we've had a nice move in equities here.
Yeah, wasn't this the battle zone we talked about when it was 3,700 that we rallied?
It's 4,100,
41, 42.
Yeah, 4,100 is the breakdown point from the end of February.
Okay.
So
yeah,
this is a big deal. I mean, you could see
it's a big zone.
I've had this. It was you could say it was the neckline. It's the breakdown area. It's just a big area for the markets. And I don't want to. I wouldn't want to get caught on the long side right here, chasing the market. I mean, this is what from the lows. We've had a 14% rally from the lows.
Summer rally.
I mean, yeah, the summer rally that we had been talking about for the last few weeks already
it happened
came.
on the solstice. Yeah.
Yeah, I mean, so do you really want to be chasing it up here? And I mean, I'm not a bull or like I'm not I don't look at the market and say, oh, the stock market is going to be down 50% by year end. I'm not a crash type of guy, but we were looking for a recovery because the market did open the year at the highs. So we were down 20%, 25% for the year. Now we're only down, 15% for the year. It's more of a equilibrium, if you will. So, it's gonna be interesting watching us into the year end. What we do here, I wouldn't be surprised if we closed the year, near the lows, near that 3,600. What are you guys thinking going into year end? I mean, here we are. We're gonna have, we're heading into the fall. Our rates going to continue to go up, and are we going to continue to see them weigh on the markets? What do you guys think? Let's start with you, Stel. What do you think about markets? Where are they going to be, higher or lower by year end?
That's a very difficult one.
I know. I mean, it's more of an equilibrium now. I mean, we've been calling for Dale said it. We've been calling for a summer rally. The markets were way oversold earlier this summer. Here we are down 15% on the year. Do we end up here at 4,500 or here at 3,700 or lower?
I think probably neither.
So you think we're going to end up right in the middle?
Yeah, somewhere there. I have no conviction on that at the moment. That's the problem.
Okay, well, you're no fun. How about you, Steve? What do you think?
You're no fun, so.
He's no fun.
Yeah, I know.
Give me an answer, you wussy. Just kidding.
Not out on the water. Yes.
Come on, man. All right. All I need is do I buy it or do I sell it? No, just kidding. All right, Steve, what do you think? Do we go higher or do we go lower by year end? What do you think? Oh, Steve disappeared. Sorry, Steve had to run. He had a personal issue. Dale, what do you think? Do we go higher or do we go lower? Or are you going to be like Stelios? We're just going to stay right here in the middle. What do you think?
Well, if it's a summer rally, it still has another 6 weeks in it.
My kids go to school tomorrow, so summer's over here.
Tomorrow.
All right. Well, I'm talking about the seasons, not
Yeah,
when
you're
kids
right.
go to school. So, I think that we'll get a pull back to 3,900 and then head up towards 43, 44, and we'll see where we're at in September.
Wow. All right. So we're going to get some volatility here. Grega, what do you think?
Well, I think that even if we retest this 3,600, we will finish above 4,000 by the end of the year.
So you think we're going to do something like this?
Yeah, even if not necessarily a retest, but even if it happens, I wouldn't change my overall outlook if we retest the lows. So yeah, I think that we will be above 4,000.
Okay. All right. So you think we're going to end the year probably about where we're at right now? You're no fun either. To be honest, I mean, you're just no fun. You know what? I think?
Always fun.
You guys know what I think? I think we're going to end the year right around here too. I'm no fun either. So.
Yeah.
No, but I'm with you guys. I actually think we're range bound, and I think if we test the outer edge of this range, like this channel. And this, remember, this is also the 200-day moving average. Let me go ahead and delete this, and let's pull up the daily chart, and just to kind of give you guys a little bit better view. This is the 200-day moving average here at the upper end of the channel. So I actually think that if we even get anywhere close to 43.50, you have to be a seller. And I think if we dip back down to these lows, I think you have to be a buyer. I think we're in this descending channel, and I think it's going to be ugly and messy, too. So, I happen to agree with Stelios and with Grega as well. But being here where we're at right now, I agree with what Stelios said. I think it's a tough decision, and we've had a nice move, and I think that where we could go from here is really solely dependent on how hawkish or dovish the Fed sounds. So
yeah, we should have more idea about this on Friday.
Yeah, and I agree with that as well. So it's gonna be really interesting as we head into we have a couple key events coming up. We have the Jackson Hole Symposium, and that's like a Fed meeting.
The global Fed meeting.
Yeah, I mean, it is the Fed meeting. I mean, the next Fed meeting is in September, and so the Jackson Hole Symposium, because we're so data dependent, because the Fed has made us data dependent, we're really going to have to pay attention what not only the Fed governors say there in Jackson Hole, but what else, other central banks are saying as well, and we'll see if we continue to see these central banks get a little bit more dovish like the RBA did overnight. So it'll be interesting. Hey, do we have any data coming out today, Stelios?
Don't think so, actually.
Okay. All right.
No, we don't.
Oh, we don't. Okay. So tomorrow's going to be an active day, guys and gals, because tomorrow we will have ADP data. I believe we have ISM data coming out. Hold on. Let me just check out for tomorrow. We have ISM services data coming out tomorrow, and then do we not have ADP data?
No, there's no ADP tomorrow.
Oh, there is no ADP tomorrow, which is interesting. Okay. Well, we're gonna have ISM services, which is going to be important because as we're facing non-farm payroll this week, that's going to be probably the second most important data of the week will be tomorrow. So we'll prepare you guys for that. Look, I know you have Giles here, and I'm excited to hear what Giles has to say because I miss doing interviews with him, but we don't have him on Trader Summit anymore, and that's because of sponsors of Trader Summit and blah 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 blah. So I'm interested to hear what he has to say. But I want to say that if you haven't tried out ForexAnalytix, you want to join inside of our community. Inside of the community that we have, come, join us here at ForexAnalytix. It's only $1 for 10 days to try it out. Also, check out the Trader Funding Program if you want to learn how to trade our money and not risk your own money. You can keep 75% of the profits and take none of the risk. It's a great program for people that want to do some proprietary trading and may not have access to larger account dollar amounts. So check it out, the Trader Funding Program. There's a little video right at the very bottom. Dale, I'm going to pass it over to you, but Stelios, Grega, and Steve, thank you guys for being here today. And we'll see you guys tomorrow on the F.A.C.E show.
Thank you, Blake. Richard, we all hope you feel better, buddy. So also thank you, Dream Team, and Grega for dropping in. Next man up, strong team we have here. Thank you, guys. Giles, welcome back to F.A.C.E, my trading warrior brother. How are you?
Hey, Dale. It's great to be here. Really looking forward to the session. How are you doing?
I'm doing okay, and I'm also looking forward to what you brought to the table today. It gave me a few hints. So
yeah,
if you want to just share
Dale,
your screen.
Dale, I'm sorry. Before I duck out, I just want to say hello to Giles. Giles, I miss doing interviews with you, but it's good to see you here.
Yeah, hi, Blake. Yeah, thank you for the introduction. I missed them too. So yeah, but good to catch up briefly here.
Yeah, I'll let you guys do your thing. So good to see you, and you guys have a fun one.
Yeah, thank you.
You guys are making me shed a tear. I'm going to play the violin now.
Yeah.
Anyway, Blake and Giles love each other, and there's nothing wrong with that. Okay,
I love you too, Dale.
Oh gosh,
you know what I mean.
Yeah, it's great to be loved. Anyway,
yeah, exactly.
Better than the other, Giles. So I know you're talking about seasonals and gold, and that was really kind of surprising how it held 1680 without cleaning out the stops at the bottom there.
Yeah,
because there were prior lows, and but yeah, very nice rally. Is it getting stretched here? Would you not reach for it here and wait for some type of pullback?
Okay, so I'll give you a brief where I'm at with it, Dale. I was long silver immediately out of the FOMC decision.
Okay.
I was chatting with CNBC Arabia, and I was saying to them and to another organization, the thing I wanted to see the Fed acknowledge was any acknowledgement of slowing growth was going to be enough in my book for the Fed to say to the market, we're not going to be hiking inflation in a pig-headed way that's going to ignore slowing growth. So when you got it. Yeah. So when you consider, and of course, I'm not teaching grandma to suck eggs here, but when you consider how stretched the dollar was heading in to the last Fed meeting, and I was continually expecting the dollar to reach peak hawkishness. So I expected it back here in June, and it just kept going and going and going. So I've been expecting peak hawkishness alongside with, a lot of investors for quite some time. So the final catalyst was the Fed acknowledging slowing growth. Now,
well, you know what, Giles, I want to ask you something because Luke Roman brought it up. The Fed meeting was after the first leg of the decline. And he said that there was a very quiet G20 meeting prior to that, and the euro stopped going down, went up every day since then. And also that was right around the time of the yen high as well.
Yeah.
Do you think central bankers got together and cut some kind of deal here? And they're not announcing intervention?
Of course, when you consider like 10-year yields kept rising and rising and rising. Remember, we had all those headlines about concern about the Bank of Japan. They kept saying they were getting freaked out, essentially, but not doing anything.
Right.
Yeah. So without a shadow of a doubt, if I was in their shoes and I was organizing finances for a whole nation, would I be? I have a hotline to all the other central bankers, without a shadow of a doubt, Dale.
Okay.
So
anyway, and it wasn't well publicized. That's another point he made.
Well, you wouldn't want to publicize it, would you? But
no, not like say come out in like the Plaza Accord type of thing where it's announced.
So it's not like I have a conspiratorial view. I don't think there's some great conspiracy. I think it's just common sense, isn't it? You're trying to manage huge, countries' GDPs. You would want to be doing something coordinated, and we see it anyway. I mean, look what the Fed's already done, and then it wasn't a massive surprise that the RBA has moved to a meeting by meeting basis now as well. And I'm expecting the Bank of England to move to a more meeting by meeting basis and probably bring forward recession projections into the end of 2022. That's what I would expect.
Okay. So BOE was what they talk about going a whole point or less?
I think, let me just check what Stel markets are with them. I think they're 50 basis points. Let me have a quick look. They are, 50 basis points. So 92% chance of a 50 basis point rate hike is in the Stel markets. 100% chance for 25 basis points. So that would be a disappointment, 25 basis points. But I'm not really looking at the interest rates right now, Dale, because I'm looking at the projections about growth, because everyone's having to deal with surging inflation. So whether, I was saying before the last Fed meeting, it's not really relevant whether the Fed hiked by 75 basis points or 100 basis points. What's relevant is what they're thinking about growth. So that's why we saw the dollar sink. And then with gold, you see, this is what I saw, Dale, was the fall in real yields.
Yeah.
Now, I use TIPS as a proxy for real yields because it's updated throughout the US session, whereas real yields is only updated once a day. So this is a bit more responsive, but essentially this tracks real yields. And for those of your viewers who aren't aware, real yields is just a nominal bond yield minus inflation expectations. So what this tells us is 10 years have been dropping, yields have been dropping, but inflation's still relatively high. So this was that stagflationary environment that gold bulls have been going on about. I got so many messages, Dale, from gold buyers saying, why is gold going down? Why is gold going down? And I was saying, it's just because the dollar and the real yields are going up. But when you get the dollar and the real yields going down, that will be the catalyst that gold needs. And, I just find it such a simple way to trade gold. You can see it back here in 2020 when you had real yields and the dollar moving lower. Look how gold outperformed. April 2021, look how gold outperformed. So, and the converse is true as well. When you have real yields and the dollar rising, you see gold falling.
Right.
So for me, I just use it as
there's less opportunity costs when that's happening. No, less competition. Yes.
Yeah, and also you have conviction to hold the position longer, which goes back to me answering your first question, which is why I'm a bit more confident in holding gold longs and silver longs. Now, silver was really interesting. Now,
that gold silver ratio collapsed.
Now, this is what I saw, and it was just providentially, just the day before the decision. I was running with some clients, and they just said to me, if gold's going up, because I was planning to go long gold on slowing US growth, they said, will silver track gold? I said, yeah, silver will track gold. And just out of instinct, I tracked the ratio. And lo and behold, the ratio was moving up
50%, halfway back.
Yeah, and so for your listeners who aren't aware of this, essentially when the gold-silver ratio is high, it tells you that silver is comparatively cheap to gold.
Yeah.
And a lot of traders will trade the ratio. So when the gold silver ratio is very high, like we saw it recently. Yeah, we saw it in 2020.
125.
It was all, yeah. And you remember that I went long silver, and I got long silver around this kind of region, and I took profit way too early on that weekly resistance. This is the silver chart in the purple. So I took profit way too soon there, Dale. Right?
Yes.
And I missed all that move. So that's like, that's my loss. But I'm trying to learn from that this time. So I'm expecting more bang for my buck in silver. And I went long silver immediately after the FOMC meeting. So I'm long in from whenever that was, right down at these bottoms. I've got this trend line, which is lovely support now for me. So I feel very confident long. And technically, it's one of the best hammer reversal bars that I've seen in the monthly chart in silver for the last at least 10 years.
Yeah, that is a big candle.
That's a very large candle. And for those of who need a little bit of help technically, it's got a long tail, it's got a bullish close. Now, crucially, and some folks make a mistake with this, Dale, when they're looking at a hammer reversal candle, is the candle has closed within the body of the previous day candle, which makes it more bullish. So if you see this candle here, yes, it's bearish, but you see the body is not within the body of the previous candle. So from a purely technical position, it's not as powerful as, say, this candle was here and this candle here. So that,
and you got all the longs out on that flush.
Yeah, yeah.
2040, and
Do you know what I mean?
But that was right around 61.8 of that COVID rally, the lows. So people, don't tell me fibs don't matter.
Yeah, like they really, really matter. And people are looking at these technical levels. And obviously, I don't just trade technically, and I know you know that, Dale. I'm always combining the technicals and the fundamentals together. And that gives you that best conviction. So you look at this and you can see, okay, this is looking like a nice run up to 22 minimum. Even just technically, you'd expect a run up to 22. So any retracement's lower, but you've got this large moving average here as well. So we've got a major moving average, the 100 or 200 is being rejected. You've got this horizontal resistance level now forming support. Hammer reversal bar, you've got real yields dropping lower, dollar dropping lower, you've got the ratio quite high, the gold silver ratio. So what's not to like about a long and silver? It's still technically and fundamentally sound for a run up to 22.
I'm curious, Giles, if there is a pullback, where would be a retest of that channel line it broke out of?
Yeah, that would, right. So that would be, now, I'll just
19.
Yeah, it's around 19. That's so about 19. Where you looking to go long gold and silver at the start of the webinar, Dale?
Yeah.
It was basically exactly that level, because I remember thinking, yes, that's exactly where I'd go long silver and gold. So it's around this. It would be a retest here. And in fact, what I do is I probably put a fib on, and what I want to see is maybe the 61 might provide support. So the 38 rather. So you might get a bit of support at that 70 region. So I wouldn't be like stubborn and insist on a retest down here. I would be
good advice.
Trigger finger around that, because it's also that large support level.
Okay. I feel more uncomfortable short term that I let go of some of my long positions yesterday.
I don't blame you, Dale. As you said, you've booked your profit. You traded a strong fundamental move. Do you know what I mean? So yeah. And remember, maybe I'm in the wrong, because I'm remembering back to the gold silver ratio being high, and when I took profit, far too early, when I could have had 3 or 4 times my run.
Yeah, we're going to 40. That's the mean. I think that's where we're going.
That's where my take profit. I'm looking at taking profit at just underneath 28.
I meant the gold silver ratio.
Yeah, got you.
Is going to 40.
Yeah.
If you have 61.8% of that first decline. But yeah, so you're
yeah.
you're bullish in metals. It brings me to this,
Yeah.
and you're in Australia, right, Giles?
I'm in the UK.
Oh, you're in the UK. Okay, your take on the military buildup in the Taiwan Straits?
Yeah, I was looking at that earlier. A couple of things to say. First of all, if anyone wants a bit of help in geopolitics, this book I recommend by Tim Marshall, Prisoners of Geography. It will really help you see where China views itself in the world and how it's going to relate to the US and its trigger points. And Taiwan is one of those trigger points.
Yeah.
I was looking at it and I agree with most of the rhetoric that we've already had during the meeting, that it's largely
political theater.
Political theater. But I also agree with the fact that it's political theater with high stakes. And China, you know, you've got to look back, last sort of 10, 20 years, China didn't have any aircraft carriers. They've now got quite a presence. And they'll be wanting to let the US and the world know that its military might is increasing. So this is an opportunity for China to get a couple of their aircraft carriers on the cameras, have a few jets circling around, just remind the world that they're there. And also, from a geopolitical perspective, remember, China's just seen Russia move into Ukraine and NATO fold its hands to some extent. So the first thing that I thought, well, that does potentially set a precedence, doesn't it? China might be thinking, actually, you know, what's the West going to do if we move into Taiwan? True. So there is that element of doubt alongside the overall view I've got, which is that it's theater. But for China, they have a genuine interest in bringing Taiwan back to Chinese territory. So it's not a theater that doesn't have real world bite. And
there is one other difference. There is a military cooperation treaty with Taiwan and the US that did not exist with Ukraine.
Yeah, well, that changes it completely. So why on earth would China initiate aggression with the US? It just wouldn't make any sense.
Well, I mean, the people that think it may happen is because for Xi to show strength in light of the zero COVID policy and the economy suffering, the real estate market cratering, rural banks, people can't get their money out of the banks.
Yes.
So there are some things coming up. Plus, it's re-election in 3 months. And F.A.C.E is important. Saving F.A.C.E.
Yeah, without a shadow of a doubt, Dale.
But I hope all the skeptics are right.
Yeah, the problem is, and this is the difficulty, is you always seem more intelligent when you're skeptical. So skepticism necessarily portrays that you have some knowledge that someone else doesn't have. So you have to be aware of people who are permanently skeptical, because it's kind of a strategy for just making yourself, there's something that you know that someone else doesn't, so you can be constantly enigmatic and seem like you have a higher level of understanding. And that's nothing to do with our conversation from anyone here today. I'm just speaking more generally.
Okay. So I know I led you away from your main topic, Giles. So
no, that's fine. But that's what I'm thinking of. That's what I'm thinking about. So just keeping an eye on it. But I'm not expecting it to do anything. And also, I've written a few pieces on what to do when geopolitics goes wrong. The general playbook is to fade it, is to buy the dips.
Yeah, you're prolific putting out research, Giles.
Yeah, thank you, Dale.
Really.
Worked really hard on it. So I've got quite a few pieces on the geopolitical playbook.
Yeah. So everyone, at the minimum, you got to follow Giles on Twitter and pay attention to what he's doing. So. Okay, yeah, we could go there.
Yeah, that was my.
So this is where you find it.
Yeah, you just find it here, blog.hycmlab, and all my stuff I update there. 90% of my stuff gets updated here, Dale.
Okay, all right. So for your intelligence gathering, instead of waiting every 3-4 months to hear him here, stay in touch, stay close, and it's got a great global view that ties in with the markets.
thanks.
Anything else you want to cover here? S&Ps, back in June, we identified 4,200 as a battle zone for, where bears may want to take a stand. Do you have a view on that? And
yeah, I was listening to the discussion earlier. Where's the S&P? Where are stocks going to be at the end of the year? And there's two thoughts I have. One is I don't mind being wrong on where stocks are going, but I'm going to be data driven like the Fed, because I think we've got a good opportunity now, especially for FX. Central banks are going to follow the Fed. They're going to be data dependent. And so we're certainly going to see markets move in line with data. So I'll be trading stocks in line with data. So if growth starts slowing, I'll just expect another leg lower. So if we see more signs of slowing growth, we've got the ISM services PMI on tomorrow. Yeah. We've got NFP on Friday. We've got core inflation coming next week. So those...
Yeah, lot on the docket.
Yeah, so there's a lot on the docket. So this is good opportunities for quick, nimble intraday trading.
Okay, now, tactical stuff.
Yeah, that's it. Tactical, and that's the time when us discretionary traders, this should be our bread and butter time, because we're looking for when we see those short, sharp narrative changes, like the FOMC on Thursday last week, right? And that's when we make. This is when we make our bread and butter. So this is the time not to be married to a view, because who in one sense, who cares whether you're right or wrong about something that's going to happen 6, 12 months down the line? It's just like rolling a dice, really. As soon as you get past 6 months, who knows what's
It's like a trading places bet between the Duke brothers.
Yeah, it's just like, who knows?
Yeah, you're going to make money on that?
Yeah.
If you're right about it, I don't know.
Who cares? You know what I mean? So
yeah, I do know.
Yeah, so that's what I think. But what I would say is, check this out. Look at the moves in stocks around. Let's just see.
The FTSE has been one of the strongest bourses out there, hasn't it?
Yeah, it has. It has. I'm just trying to get the right. I'm just wanting to see one index. Let me see. Now, hang on. Let me get this right. I'm having. Let's look at the Dow. It doesn't really matter which one. I just want to find one. That's it. I just want to find one index. Now, if you look over the last sort of 125 years, what you see is that stocks around 31st of October, and this is true across all the major indices, they tend to gain from the end of October into the end of the year. So I will be looking at this time, and if there's any reason to go long in the Dow, the NASDAQ, the S&P 500, the DAX, the Euro stocks, the FTSE 100, in any of them, I would be thinking, that'd be a good run into the end of the year. So my ideal scenario, and I say this with respect because I'm not wanting bad things to happen, but what I'd expect is another leg lower in stocks as we see slowing growth build, and then a kind of capitulation around the end of October, and then potentially gain into the end of the year.
Okay.
So
great
that's
seasonality.
That's
there.
Using the seasonality, because you tend to see inflows into major equity indices around this time, October, November, December. And that's why, people are away on holiday, trading buddies, they're all over the place. Do you know what I mean? They're on holiday, right? They're not wanting to initiate big positions. It's just a bit of common sense here. So,
and your seasonality high looks like it's coming in here. Is that at the beginning of September? Is that still in August? If you go back to the left, before the low. Up here, up there.
Yeah, up there. So the low comes somewhere.
No, the high. The
high is just here.
No.
Here.
Back in April. Yeah, there. September.
Yeah.
Okay, so that's almost the fall.
Yeah.
So I was saying that the rally could last until the fall.
Yes.
So okay.
Yeah. So I don't use it in a mechanical way, Dale.
Yeah.
But there was this old school hedge fund guy who I've been in touch with over the last 5-10 years. His pattern matches these seasonal patterns. And I've just seen him over the last 5 years. Like, he pointed out to me when the gold silver ratio was high back in 2020, he pointed it out to me and said that his fund is going structurally long silver. You know, you don't want to miss out on this.
Yeah.
And then he does things like he sold all his stocks around April of this year and said, I'm not going to be doing anything now until like October, November.
Wow.
Do you know what I mean? So I thought I've kind of seen this from this guy, and he's
old school guys. They know a little bit, don't
yeah,
they?
he's like an old school guy. Do you know what I mean? He's retired. He's not getting into the game, but he just loves the markets.
He just has insights and wisdom and experience that you can't really teach. You have to live through to get.
Yeah, you have to live through them. And I think like I would speak. Some people just didn't recognize it. You know what I mean?
Yeah.
And I was like, why are people not paying attention to this guy with years of experience who's speaking such sense? You know what I mean? People were arguing with him. I thought, and that's how I got to know him a bit better. And I was like, actually, this is a serious guy. He really knows what he's talking. So ever since that, I've just kept that in the back of my mind. The one thing, have I got time to share one thing?
Sure.
And this is just to help like folks who may be struggling with intraday sentiment trading.
Yeah.
So like this was a very short trade that we took this morning after the RBA meeting.
Yeah.
So it was just very simple using pivot points. When the Reserve Bank of Australia, I'll just go back to the decision. You can see it here. It was just simply, you read the, I know time is short, but you read the report. The bottom line was that the RBA said they're not on a preset path. Lo and behold, they're following the Fed. They're concerned about growth. So we know that this is dovish. It wasn't particularly tricky, okay? So we said, okay, the go-to currency pair for trading RBA, RBNZ divergencies is the Aussie New Zealand dollar. And we were just looking for a quick flush down to the S3 pivot point.
Nice.
So it's very simple. And
it's so easy. It's, it's easy.
Well, in once, the problem that I had, Dale, the problem I had is I wasn't quick enough when I first started. I was too slow. So I would have seen this probably like today and thought to myself, oh, okay, that's a really good trade.
Yeah.
Sold at the lows initially. Do you know what I mean?
Yeah.
Price then retraces. And then by this,
so now you're just reacting instead of thinking about reacting.
You're not. And then by the time you get to Asia session tomorrow, you've got a new sentiment driver because you've got data coming out of New Zealand, and then it's a different driver. So what I realized is that when I was trying to trade intraday initially, I was trying to trade intraday like a swing trader.
Okay.
Do you see what I mean? So
I do.
If I struggled with it, then I expect others struggled with it. Other people are struggling with it. And so once you got that sentiment, commit to it, because what you'd find is the Aussie New Zealand dollar would really struggle to like get above that daily pivot point or that R1 pivot point.
Yeah.
Because sellers are going to step in there, right? So in other words, you can really anchor your stops and you can have conviction. So even now, US.
What's the time frame on this chart?
That's just a 1 hour chart, but the time frame doesn't matter. These are daily pivot points.
Okay.
So if US traders take this back up to 1.1067, I would sell, but I wouldn't be greedy. I just look for a move back down to 1.1046.
Yeah.
And then say, okay, I've taken it. And then at the end of the day, I'll close my orders. I wouldn't try and hold this overnight or tomorrow, because then it's a new sentiment. So sentiment usually lasts 2 to 3 sessions. And basically 2 sessions. By the end of the London, and certainly by the end of US tonight, it's over. Do you know what I mean? And then it's a fresh sentiment driver. Arguably, this may be a little bit different with the RBA. You might get another run lower, but if you do, you could just expect into that daily support. So the max move that you could reasonably expect would be a run down to 1.0980 anyway. And then you got a reset technically because of all these collection of lows.
What a great conversation, Giles.
Yeah, good, Dale.
Really, I don't know if you're paying attention to the chat, but thank you for coming here and edifying the community. You were much enjoyed, and I always appreciate your insights. And, one of the things I'm grateful for to Twitter is because I met people like you on Twitter. And
likewise,
you're a great addition to the rotation, buddy.
Oh, Dale, I always look forward to it because I know I do a lot of media stuff, but sometimes I'm speaking to people that don't really understand and know and love trading, and it's a bit frustrating sometimes. You understand?
Yes.
When I'm talking here, I'm talking amongst brothers, you know, people who understand, and I know that they will appreciate and give good questions, and it's a different experience. So it's a mutual experience for me, Dale, too.
Okay, and people are asking for your handle. It's Giles Coughlin. At Giles Coughlin, am I right?
Yeah, it's at Giles Coughlin. Shall I put it in the chat?
Yeah, go ahead, post it for them.
At Giles Coughlin CCA. I think that's. Just check I got that right. And that,
Yeah, there you got it.
There it is, at Giles Coughlin CCA. That's it. Yeah.
All right. So a guy who can see clearly through his bifocals, Giles Coughlin. Find him on Twitter. He's really has a patience and demeanor. You're going to learn a lot from this guy. Thank you again, my trading warrior brother, for being on F.A.C.E today.
Absolute pleasure, and I look forward to the next time, Dale.
All right, Giles. Good hunting, buddy.
Yeah, take care now. Bye.
All right. Adios. Giles Coughlin, everybody. You're very welcome. Giles, thanks again from the whole attendee audience, and you could join the team in about 14 minutes on the Morning Edge. I'll see everyone tomorrow. Good hunting. Remember, the difference between pros and amateurs are pros know how to lose, so you have money left to be right with.